What's up everybody? Welcome to the Stocks channel. My name is Cory and today we see a continuation of the strong bounce across the board on the indices as we are continuing to bounce off the 200 weekly simple moving average. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we're up 3.1% as we continue that strong bounce off the weekly 200 simple moving average price target at 358. Remember, this is the level I said bounce or die, because if the market starts breaking below that support, we could enter a secular bear market. But as far as we know, as long as we are above SPY 358, we could still just be in a bear market within a secular bull market. That is a very big difference, so that is a very good risk level, because as we start breaking down below that level, we need to start expecting much lower downside, which is much more synonymous with another 2008 type bear market. But so far we're getting a very strong bounce off that level, and today we did see increasing volume as we are now up over 3% in a single day. So without a doubt, we are seeing an end to the buyer's strike, and we are starting to see shorts getting squeezed out of their positions that were expecting us to just continue to crash down lower. But now we are starting to see a shift in sentiment. Remember, nothing changes sentiment faster than price. So as we continue to bounce, I do expect bulls to come out of the woodwork who are too afraid to buy at 358 but now dying to buy at 378. That's just how price action works. People love chasing what they missed. So I do expect to see some type of pullback once we start getting around this resistance zone around 381 to 382, and then we could come down here to fill that gap. That could be our next higher low, and then we could start breaking out and getting the higher high. And this is the price action we need to confirm the downtrend is ending. Remember, these are downtrends until they're not, and today we did get a breakout above the previous daily high, which was just below 371. So now we need to get confirmation that we're ending the downtrend with a higher low followed by another higher high. Now there is the possibility, if too many people are caught off guard on the short side, we could just rally straight up there to the resistance at 390, but that is a lot less likely because we do have significant resistance in the 380s. So again, I still think this is a downtrend because price action has not confirmed a higher low followed by a higher high, and we're getting very close to resistance in the 380s, so that is going to be the most critical resistance to pay attention to. As long as we're above SPY 358, you can stay long, but the farther we get away from that level, the more your risk is increasing, because we're getting closer to critical risk levels at the resistance side and farther away from critical support levels down here at the support side. So if you miss that buy at 358, you really need to be cautious while chasing it up here in the 370s, because we're getting very close to the next critical resistance. To the downside, you want to be looking for support right around 373 and this gap fill at 369. And while it does look like this gap is not open, you simply just need to switch over to a 1 hour chart, and you can see that gap did not fill today. That is a bad daily candle print, and that gap is still open at 369. So do keep that in mind. If we break below the gap, you're looking for support right around the June lows at 365.86 and the intraday low at 362. And of course the critical risk level at 358. While we are in the downtrend, it's still possible this is a lower high before the next lower low. So if we do get that next lower low, that will be the price target at 350. And the only thing that is going to invalidate the downtrend will be confirmation in the price action of higher lows and higher highs. And it is still too soon to know if we have that. On the Nasdaq 100 triple Qs, we are up 3.14% today, and we came right back up towards this resistance just below the gap fill around 283, and that is also going to be the resistance trend line from the June lows and the March 2020 lows. So this is going to be a very critical resistance zone between 283 and that resistance at 284. And then just above that, we have the 20 simple moving average and the resistance trend line in the 280s. So there is a ton of resistance in the 280s for the triple Qs. And on a break above that, we have the critical risk level and resistance at 293. Again, we did break a critical resistance level because we did get a daily close above 280, but we do have a gap to fill to the downside just below 276. So from here, if we do get rejected from resistance and we can hold up on a higher low and then get another higher high breakout, we can start to say the downtrend is ending. The critical risk level is going to be down here at 267.5 and the June closing low at 271. And if we continue to make another lower low, the next price target is still down there at 258. And we are still in the downtrending channel. So the bull breakout will be a break above the downtrending channel, which is going to require the triple Qs to break out of the 280s and enter into the 290s. On the Dow Jones, we were up 2.83% as the Dow Jones gapped up over the previous gap, which was right there at 299, and we are now closing very close to the 20 simple moving average of resistance at 305. On a break above 305, we have the resistance trend line at 309, and then just above that, we have the critical risk level and 50 EMA at 312. If we get rejected from resistance, you're looking for support right around 298.5 and the gap fill at 296. And below that, we have support around 293 and the previous low at 287. And of course, we still do have the elephant in the room, which is that open weekly gap at 285. So you can't get overly bullish just yet, even though we are seeing a strong bounce. We still need confirmation of the higher low and higher high to say that the downtrend is ending. And our risk levels are still going to be down there at the September low. On the Russell 2000 IWM ETF, we continue to see relative strength, going up 3.96% today and closing back over the 20 simple moving average on a gap up and run. So a gap up and run, closing back over the 20 simple moving average and never closing below the June lows is definitely showing us the small caps are leading the way. If they can get back over 178, which is the critical resistance and risk level, that is going to tell us the small caps are leading the breakout, and that is going to be our first indicator that we could be ending the downtrend. To the downside, we want to look for the gap fill at 170 and then support levels at 168 and the June low at 163.75. And if we do break the June low, the next price target will be 159.5. So watch that support zone right around here, because if we can build a higher low followed by a higher high, that will be a leading indicator that the small caps could be breaking out, and that could tell us the rest of the market is likely to follow suit. On the ARKK ETF, we were up 7.63% with a very strong bounce off of the support trend line at 37.5, and just like the small caps, the ARKK ETF did not break down below the June lows, and we're right back to resistance at 41, which is our resistance trend line and our 20 simple moving average. On a breakout above 41, we'll be looking for resistance at 43 and then 45.67. And then above that, we'll be looking for the gap fill at 47. Downside support remains $40 and the support trend line at 37.5. On the VIX, we were down 3.42% today as the VIX did finally crush back down below 30. But we are still in a bull trend of higher lows and higher highs while the VIX is above about 28. The VIX crushing all the way back down below 24 could tell us we could be entering a bull rally, but that is still a long ways away, so do remain cautious of more volatility while the VIX is still elevated above 24. Again, volatility works in both directions, and that is exactly how we are able to get such a strong bull rally today, even though the VIX was just recently elevated into the mid 30s. Keep in mind, volatility works in both directions, and the bulls can also use the VIX to crush it down and drive the market higher. On Bitcoin, we're currently up 3.2%, and Bitcoin is finally starting to see a bull breakout above the resistance trend line, which is just above 20,000, and we're right back to the 50 EMA, which is just above that zone. The bull breakout will be a daily close above 20,000 and then breaking the daily high just above 22,000. If you're going long on Bitcoin, your risk level is still down here at 19,000, because if we break that support, the next leg lower will be 17,000, and we do not have a bull trend just yet. On Amazon, we are up 4.5% today as Amazon is bouncing off that support zone right around 115, and we're right back up to the 20 simple moving average at 122, and we do have an upside gap to fill right around 125. Now, we did also gap up, so we have a gap to fill to the downside at 117, so continue to set your risk around 115, because if we break down below that support zone, we could go for that next leg lower at 106, but right now we are getting a strong bounce, which means we could be trying to fill the gap to the upside and test the 50 EMA of resistance. On Microsoft stock, we were up 3.38% as Microsoft gapped up over the resistance at 242, and we did close back over the 20 simple moving average, and we're just below resistance at 252. To the downside, we could fill the gap and retest the support at 242, and if we break the 252 resistance, we'll be looking for the 50 EMA just below 257 and the resistance trend line around 260. On Nvidia, we were up 5.23% as we did get a strong bounce off of that support at 122, and we're well on our way to trying to close the gap at 142. We got a daily close back over the 20 simple moving average, and the next upside resistance will be right around 135, and to the downside, we now have a gap to fill at 127. So as long as we're above the 20 simple moving average, which is right around 131, you can stay bullish, because it's very likely that we're trying to close the gaps to the upside, because this stock is definitely due for some type of a relief rally. On Tesla stock, we were up 2.9% as we did close below the Bollinger Band yet again, and we did see Tesla printing a perfect doji candle. Now Tesla does have a confirmed double top price target that is validated to take Tesla all the way back down to 231, but I would not be surprised if Tesla tried to fill the gap to the upside before hitting the price target to the downside. So for that reason, watch that resistance at 258.6 and the gap fill at 262.47. And if we fill that gap and instantly find resistance, you still need to be cautious of another lower high before we hit the price target to the downside at 231. If we can break back over the neckline at 270, we could invalidate the downside price target. So that remains a critical risk level if you are shorting this stock. On Apple, we were up 2.56% today as Apple did gap up and close back over the 5 EMA, and we're getting very close to the resistance at 147. Apple is still in a downtrend while it's below 150, so that remains the critical risk level and resistance. And if we can break back over 150 to about 152, we could break the downtrend and come all the way back up to the 50 EMA at 154. To the downside, look for the gap fill at 143 and the support zone right around 141 to 142 and the previous low at 138. On the financial sector, we had a gap up island reversal, which is a bullish pattern that could tell us the financials are heading back into a bull trend. We're up 3.72%, coming all the way back up to the 20 simple moving average. Look for the next resistance above the 20 to be at 32.8 and the gap fill to the downside at 31.35. On the industrials, we're up 3.48% with another gap up island reversal, and we're getting very close to the 20 simple moving average of resistance. The healthcare sector was up 2.32% today, back up over the 20 simple moving average and very close to the 50 EMA of resistance. The energy sector was up 4.3% today with another gap up and run open, and we're back over all the moving averages with the price action, so you can stay bullish right here with your risk level at 76. So jumping back over to the S&P 500, we continue to see a strong bounce off of the 200 simple weekly moving average, which is a very critical risk level, and you can stay long as we're above that support. If we break below that risk level of support, you need to instantly get more risk off because we could be entering a secular bear market. So continue to respect this bounce because there was a very high amount of bearish sentiment, so we could still see more upside in this rally, even if it is just another lower high before the next lower low. Always use great risk management and know these risk levels, and make sure your trade plan is prepared for either scenario. Also, don't forget that I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. If you're looking for more information about Bank or want to subscribe, you can click on the link in the description of this video. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.